guys, it's May for Markets with May, and today is August the 29th. We've got half this week in the month of August, and then half this week in the month of September, which means that we are in month end. And I think in a lot of ways that kind of describes why this market is trading a little bit funky. I'm going to share my screen. As you guys know, past performance, that's not indicative of future returns. We always say that because, this is for the updates, so to speak. So wait, actually, let's go to the indices first. You can see that all of the indices are red, but we do have crude trading up. And this has been from down a lot to more or less flat on the S&P, but you still have NASDAQ down 30 basis points. If we go to FinViz, we can kind of see we've got kind of a mixed bag. We've got some of the large cap tech names down a touch, I want to call it. And then you've got energy up quite a bit. Now I want to show you the 1 month performance. You can see that there's a lot of names that have made a lot of money. And if I go back out to 3 months, you can see how much some of these have moved. And it's with that context that you got to think that that's why this market is kind of flat going into the fourth quarter. Now, the big ridiculous sell-off from Friday, which because of the nature of what I hold, we at Markets with May were fairly fortunate, but in fair and square, I want to count my blessings more than I want to take a victory lap. I want to show you, everybody is blaming our Fed chairman for his conversation, Jackson Hole, but I do want to go through what was said very carefully because I do think it's exceptionally nuanced. Now, after he spoke, the other Fed folks were there too. And so there were a couple that were interviewed reiterating this. So if there's any confusion, I am definitely sure that I'm uncertain on this. But the idea and the focus was about bringing down inflation expectations. And that has a particular nuance to it. It is not necessarily that they're going to arbitrarily raise or they're going to raise crazy or it's going to be this massively hawkish for no reason. There's a specific reason they're doing it. And he went through a 3-point discussion about lessons from the past. And so that was very important as relates to what exactly to think about he's going to do. And here I've highlighted the last part of it. That brings me to my third lesson. And he says, as inflation becomes entrenched in wage and price setting, then you have a set of things. And he discusses Volcker subsequently. And he talks about the Volcker period being very painful because after trying to get expectations down on inflation, Volcker essentially had to do this massively restrictive monetary policy. And while there are some people that love Volcker, I'm not a fan because I actually think that when he did it in timing and what have you, and then therefore Greenspan, that is like really academic at this point. So I'm going to try not to go into that because definitely two economics nerds can have quite the conversation about that. But this last sentence that he landed on is so important. Our aim is to avoid that outcome by acting with resolve now. This very clearly can translate into the following. We are trying to make sure that you guys don't think that we're insane. I'm going to say it in extreme to help those out that really don't speak economics speak. But he's like, look, I don't want you guys to think I'm insane and unwilling to raise rates or worried or scared or this, that, and the other as relates to what's going on the macro front. I'm going to raise rates because at the very focus of it is I need you guys to know that I care about price stability and that we're not going to have this situation where everybody's second guessing me as relates to how inflation might increase. And what it ends up making the market do is everybody starts bidding up labor like crazy. Okay. And then this was further reiterated by some of the other folks that spoke that they're really watching inflation ex food and energy. So they're not confused that they can't do anything about food and energy. It's the labor cost that's the issue. Okay. So here, when we look at food, ex food and energy, you do see that it's 4.6. Okay. With food and energy, you have it at 6.3 on an annualized basis. So it came down a lot, but he even said, look, I get it. One-time blip does not stable prices make. So I'm watching this like a hawk. Let's not be confused that if inflation comes down a little bit, ex food and energy, then I'm going to be like, oh, we're just going to go back into quantitative easing. No, I need to know that this has actually stabilized from a pricing perspective. Now, realize very carefully that this particular bout of inflation on food and energy is actually fundamentally different than what happened during the Volcker period. During the Volcker period, you did have OPEC doing a very specific set of things. Here we have an actual war, okay? Very different. Particularly, it's going to be different as well on the food side, which was not necessarily a core focus of the Volcker period. It was really energy. And so you definitely have a very different scenario going on. But the point is that he's not going to let it get out of hand. Just FYI for anyone who might want to rally this market so aggressively. I mean, if you looked at this before, you got to add 3% to literally every of these numbers on a 3-month basis. That's a big move for some of these companies, given the uncertainty. And I'm not even bearish, but even I was like, whoa, does it really need to move? Does Amazon really need to move 20% in 3 months, given what's actually going on at Amazon? Or actually, even if you go backwards and you look at just this from a 1 month perspective, you can kind of see, add 3% to that. Do we have the certainty that would indicate, add 3% back from last week? No, we do not. So I think that's where he's coming from in the conversation that he had. Sometimes out of context, this can get very dicey. Now, because we're in this in-between period, I am going to talk about MGM, because I think MGM is a company that's going to be very interesting for both the fundamental people and also my day traders that are looking for a little insight on the fundamental side. But before I do that, let me just talk about what's going on the macro front this week. We do have retail. Ooh, this is wrong. Sorry. You know what? I will come back to you on that, but we only have one really interesting data point. Mostly this is a dead week as relates to economic data. And then in earnings, we do actually have a couple of earnings that could be interesting. Best Buy is a fun one. I think that this is probably one of the more controversial earnings. The thing trades cheap, but we know that consumer electronics has been a weaker part of retail sales. So this one could be very controversial to play in the options market. I'm doing it as a lottery ticket, hence I refuse to go too deeply into this. And for my options guys that are a little more savvy, the way that I'm doing it, I'm fully prepared for this to go to a big fat donut right on the open, but I'm doing calendar spreads, above and below less than 1 standard deviation, just because the vol on the front week is closer to 100 and the vol 1 week back is at 60. And if this thing, basically I will lose every cent if this thing stays more or less pinned right where it's at Best Buy. Phillips Van Heusen PVH has a little bit less liquidity, a little less, I want to call it ambiguity, because it's really just an apparel. It's got some really cool apparel stuff. And largely speaking, if you can get China to rally back up, that's when you'd go back to it. But I think that's a little less controversial, whereas Best Buy is a bit more controversial. Between the two, that's what I would play. But I'm not going to go through that because I'm really afraid somebody's going to watch this and be like, I'm going to do it. And then that thing goes to zero, but they actually bet the farm on it. I'd be sad. That really is play money for folks that have actually been doing okay this month and have a little extra capital to spend. But that's what I would just say briefly on earnings. Catalent reported this morning, it actually was an okay quarter, but there was a lot of extra FX charge in there that made the number look really muddy. So I'm not necessarily taking big calls in healthcare in that regard, except for where I feel very strongly, it's such as a Pfizer, that they're misunderstood by the marketplace. And I would want to own that for long term. But Catalent isn't one of the ones that's on my list. Just a quick report on that. Now let's talk about MGM, which did not move on what was a pretty good earnings report. And there's reasons for that. But I do want to use this in-between time to do just a little bit more as relates to what's going on fundamentally for some of these companies. MGM Casinos, okay, is going to become this story. MGM Resorts is going to become a story that's rather interesting. Everything's been spun out at this point, and they've really had a crazy, like this has been a crazy time since COVID. And the reason they've had a crazy time is because of the China exposure. They definitely have casinos in Macau, some of which have been renegotiated, restructured, readjusted in every possible way. And they've definitely sold off and purchased assets during this period of time. So this is not the easiest financial statements to understand. And there's going to be people that know it better. But for those that are going to choose to day trade it, and there's real reasons to do so, I just want to have you have a quick look at this. This is the numbers and they look pretty good. Ooh, I think I've got this a little bit run over. The numbers don't look bad. You can look at top line growth on revenue from the casino itself. That's people that go in the casino and actually play. That number is up a bit. But really, you're starting to see people travel, like I said, because I am slightly bullish travel. And that's what got me a little bit excited. This is a doubling in what they're making on rooms. And some of this as well, by the way, is people going to conferences again in Vegas specifically, not yet in Asia. I will show that to you. Food and beverage sales also up a lot. And just like everybody else has said within travel, when people physically make it there, and domestic travel in particular, they do actually spend a lot of money because they have money saved from other things that they aren't spending that they might have in the past. You know, we've got a shortage of autos, so some people are extending out that purchase, et cetera, et cetera. But look how much they are spending once they are in the casino. So the casino becomes the draw, but everything else becomes quite profitable. And that's how you get to this number on revenue, top line growth. Then when you go to expenses, what ends up being controversial is this number right here. And that has to do with the fact that this in the middle is very muddy. And this in the middle is very muddy, is muddy because you've got a lot of transactional stuff that's happening. You've got a lot of weird one-time stuff that's happening. Hence, when you go through the financials for MGM, you really do have to look at the other page and then make a call, okay? This is a controversial name, whether you're fundamental or whether you're a day trader. And so this is what they show. So I'm gonna go to the top first, and then I'm gonna go to the bottom. You're gonna have to look at EBITDA. The R stands for rental and also restructuring, okay? So this mostly is restructuring when I look through the numbers versus rental expense, which I will show you on the following slide, so you can just be very aware of why this is so controversial for even the fundamental folks, okay? So here, when you look at international, you can see very clearly how much Las Vegas has recovered, which a lot of you guys that are enjoying Las Vegas probably already know by going there physically and seeing it, right? And definitely there's been more than one conference that has made it there, and increasingly so from the first quarter to the fourth quarter of last year, and then to the second quarter, which is included here, month ending January the 30th. But the regional operators, they were the first ones to really recover out of this, and now you're seeing full recovery there, and you are seeing some acquisitions there for MGM and some M&A activity associated with the regional operations. But China is literally not producing anything. And I wanted you to see this because the revenue from China, even relative to last year, is half, but relative to 2019, right? If we're looking at US versus 2019, this is a huge increase. The US casino business has recovered past 2019. But the Chinese casino business has not even remotely recovered. And I want you to understand something. Chinese people gamble, okay? So realize that this number is also being done without Chinese folks coming to the United States. This is pure Americans and those countries that are cool to travel to the US. That's what that number is. So if we get a China uptick on travel in the latter part of the fourth quarter or therein, this MGM becomes incredibly interesting, which is why I think some of the fundamental people will come in here and nibble on this sometime in the months to come. And in that nibble will become a very interesting period as well for the day traders who love to see big swings in names, because people definitely know how to trade the casino stocks with a lot of momentum and volatility. Right now, it's not doing that. Okay. Additionally, I really want you to kind of see on this recovery, this is the MGM EBITDA. So EBITDA, earnings before interest, tax, depreciation, amortization, restructuring, and rental is what this is. And there is a footnote that attempts to suggest that this is really more restructuring than it is rental, but I will show you what that looks like on the next page. So this number right here is what you'd use. And if you look at 2019 again, very clean, this is a huge increase for Las Vegas EBITDA, so money that's actually brought into the pockets of shareholders. MGM, again, MGM China, it's a big fat L on EBITDA. It was significantly higher before, but again, like I said, these were in growth mode. MGM has not been in Macau forever, so to speak. It has not been in Singapore forever. Those areas, while they are, I want to call it semi-opened up because the restrictions on Singapore have improved dramatically. Because of the Chinese experience there, you're not getting nearly the kind of tourism dollars and tourism activity that you would have had in 2019. So realize that. Not the least of which, by the way, even for some of these regional operations, which might include the Mandalay resorts, in Singapore, realize as well that a lot of that business comes off of the cruise line business off of Singapore, which is a major port that people just aren't going to right now, because that would have been mostly Chinese people and people from Hong Kong. So that is what is going on with MGM. If we get any, like MGM now is becoming more than it was before, a China reopening play. And for that reason, given how aggressively these numbers could flip for a fundamental person, MGM really is one you kind of want to keep on the radar screen, whether you're fundamental or whether you are a big time day trader, because when it flips, it will flip very excitingly for all people involved. Now, the last thing I just want to show you is book value, because there are still some asset plays going on with M&A activity. People are being very thoughtful because now you can kind of see what's on the horizon. Also, you've got a rising interest rate environment that's always going to be relevant for any kind of real estate situation happening. You've also got, remember, in some cases with casinos, hotel owners buying the hotels, the hotel portion, and allowing some sort of operating lease with the casino. So that actually is why you should take a look at the balance sheet. So when we look at enterprise value incorporates back in the cash as well as the long-term debt. And in the case of the casino operators, that long-term debt, I hope you can see this. I'll just increase the zoom here. The long-term debt has to also incorporate the operating leases because there's just such a big liability associated with that. And that's just how they have structured themselves, is to lease back the property to themselves, or somebody else owns the operating lease and they pay it. But realize that because they now have a lot of cash and they do have assets held for sale, so that will give you more cash, that first of all, that has implications to book value, depending on how you think about book value for the casinos, how important that might be. I don't think that's the right way to look at it, but I'm just going to throw it out there at 2.3 times. It's not the end of the world. But if you then do this math, you do get an enterprise value of about 40. Now, this can vary depending on how you want to do the math. But given that you've got earnings of a certain amount now, depending on how you want, how much credit you want to give them for the sale, you do have something from an EV to EBITDA basis. So here's your EBITDA, 919 on the quarter, up a lot from the previous quarter. If you want to multiply that by 4, you do end up with an EV to EBITDA that is approximately what Google is showing. So whereas sometimes I'm very critical, this is the right EV, enterprise value to EBITDA. It's just a little bit off of my personal calculation at 7 times. That's cheap if this thing is coming out of it. And so as a result, there will be both fundamental players. These would be fundamental, like growth at a reasonable price players, those specific style strategies, as well as day traders in this. Because again, like I said, the big wild card with MGM is, what is China doing? So with that, let me hit the pause button. That's what I have prepared for today. Any questions?
You may say MGM?
MGM.
Yeah,
so the way that
is China building casinos?
It's
is that
Macau.
the competition?
No,
okay,
that's not. I mean, you shouldn't think about it.
China's not in that business.
There's no concern there's no major concern that people have that China and the relationship between China MGM and China and Wynn, which would be the other casino operator, but Wynn has a little bit of a different dynamic. I still have to take a closer look, but I liked what I was seeing at MGM ever so slightly better than what I was seeing at Las Vegas Sands and Wynn. That's why I presented it today. But what happens is they have Macau is really the place that you have casinos in China. You don't have casinos in mainland China. That's just not currently on the radar. Okay. So if we're talking about Macau, those are leases that are done, or what you do is you basically, as an operator, get a lease with the government of Macau. They get a cut. You put in a Chinese person to run that business. C'est la vie. The casinos have zero incentive to be anything other than fully compliant with whatever it is that China wants a la Macau. And that's what's going on. The other thing that's related to China exposure is their property in Singapore and Japan, because you do have Chinese people that travel to those two locations, and absolutely the high rollers from Macau frequent those two locations, typically in a China open situation. In a China closed situation, those regional operators have to make it on their own.
And China, is it all COVID? Is that why they're shut down? or is it
I
something
mean,
else?
that is a controversial question. So officially, yes.
Okay,
You have a huge period. I think you have like a 14 days still. Might be longer than that. I think it has at times been longer than that. I have to double check with some of my Chinese friends who I was literally at dinner with this weekend. But some of them are finally going home for the first time in a while, and there's like a big restriction. The restriction is very serious, by the way. They don't F around. You have to bring your own food and all that stuff. But quite
right.
frankly, they have it down to a science. So that's its own intriguing thing. You guys go on Google YouTube or Google it, YouTube it, see the videos, but they definitely have it down to a science. It's pretty impressive. But those restrictions alone do make it difficult for people to decide that they want to go for a vacation in Macau because you are restricted in Macau.
Yeah, I know the revenue in China is 1/5 of what it was in 2019.
Yeah, it's
That's
bad,
what I saw.
right? Yeah, so when it flips, it will flip aggressively, is my thinking.
Right, yeah. That's a really good, that's an awesome, awesome evaluation.
Yeah, so if you're going to use the options market, I do think using a calendar spread or a diagonal, meaning go farther back on your options and then use earlier weeks or months to pay for it. But all of this is highly, highly controversial. This will be volatile until it is not volatile. But trading at 7 times EV to EBITDA, a fundamental person has to raise their eyebrow and be like, fascinating. I probably do need to do some more work on it. That's why I presented it.
Great. Okay.
Cool. Well, that's all I got for today. We are coming out of earnings season. And guys, don't forget that we are at month end. So it will be weird, for lack of a better way to describe it. Up, down, I don't know, but it will certainly be weird. And we'll have lower volatility, which from folks that are trying to take a position, because most people are starting to go on holiday very quickly if they haven't already. But take care, guys. See you tomorrow. Bye.